SwissBorg is the official partner of my channel where you can buy, sell, hold, and more importantly stake your cryptocurrencies. You can even earn yield on your stablecoins. Sign up with my link and you'll earn up to $100 worth of their native token CHSB just for depositing €50 worth of crypto. SwissBorg. Hello everybody, welcome back to this delicate balancing act of traditional markets versus crypto versus the world, basically. So we've started to see that a little bit of a move. Yesterday I pointed out that if there was to be a bouncy area, even if it's just for this last bounce before a crash, based on a weekly for the Nasdaq and the S&P and more or less for any chart really, 200 weekly moving average is where you're likely to see it. So we speculated about that before the markets opened yesterday. We came down to test it again. Recognize this is a weekly chart here, so this is where we found a little bounce from. We back tested this a little bit yesterday, didn't we? I mean, there's not much to go by, but we see this peak over here 2007. We started to consolidate quite dramatically. We came down to touch the 200 weekly moving average 3 weeks in a row, and then we had a decent reaction before the financial housing collapse. Bang. Same deal over here. Again, we went through this yesterday. It's just worth pointing out that, it's just worth pointing it out, to be honest with you. I'm not saying anything has to happen, but the last two times that this has happened, after a peak in the market and a consolidation down into it, we do find a bounce. So one tag, two tags, and in this instance, we bounced effectively 32%, so it's quite a significant bounce. Now, I'm not looking for any of this sort of stuff to happen in any kind of similar way. It's trading 101 when you look at these 200 weekly moving averages. You should hope to bounce from them and maybe even reverse from them. If we break down from them, it is kind of what's known as squeaky bum time. That's not the official Investopedia word for it, but that's what I would class it as, squeaky bum time once you start closing below here. And that's why we should always entertain significant lows following this, which is why we've started talking about things like, obviously 16, 14, 12,000 and maybe even 8,000 for Bitcoin, because obviously we all know that Bitcoin is below its 20 weekly moving average. So there we go, a little bit of a bounce on traditional markets. Also, we're still above the supports for Euro and obviously for the pound. Now, a lot of the move yesterday, in my opinion, is because the Bank of England they've not pivoted. They've started buying effectively bonds, basically, to try to avoid pensions getting wiped out. Things are getting pretty nasty around here, and that in itself has made it's kind of created almost a meme across traditional markets, which is that, oh, Bank of England have gone into QE, which isn't exactly true. At the moment, they're fighting against their own. They're meeting in the middle. You've got the government basically saying, we want growth, we want lower tax, we want spending. It's all fine. Inflation's high. It'll go higher if we carry on doing this. And the Bank of England are going, oh my God, we want to support spending, we want to support growth, but we also don't want to go to complete wrecked city when it comes to the pound. It can be technical if you dive in deeper to it. Maybe I'll make a video about the UK economy and what exactly is going on, because I know a decent 25% of my audience is from the UK, so maybe I'll make a video about that later if I have time. But anyway, that's created some kind of effect in markets now, because they're making the assumption across traditional worlds that the euro might do the same, because the euro's heading to the same spot, basically, whether they adopt the same mad policies that the UK has done, or if they go about a slow decline into wrecked city, is up to them. We're all going to wrecked city one way or another. The UK just wants to get there first, that's all. We got there first, we win. Anyway, Dixie obviously pulling back, and now we're beneath the trend line. So again, this last bounce before the crash appears on face value now, as we're midweek basically into Thursday now, to start to build some kind of momentum, possibly. Again, I look at these charts based on major supports and weekly term timeframes. So to expect them to turn around Monday, which they looked like they were doing to start with, we had a reaction, wiped out Tuesday, was it? Sort of bounce on Wednesday. It sounds like a Craig David song, but I mean, basically, if this were to start to work, we would see the Dixie sort of come down to the 10 exponential as it usually does, and then from there bounce and break. But you know, anything is possible. The 21 hasn't been tagged in a while. It has been tagged in the past. Maybe we get a deeper consolidation below 110. And finally, oil. This is before we even started with Bitcoin. Finally, oil still moving within its trend line. This is one of the only things I was trading yesterday, really. So bang, 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 bang. All we need is a bit of a move on the Dixie. So it's the strong dollar that's pushing it down. Obviously, the inverse effect on the Dixie chart allows everything to move up, including oil. And so it's nice to see that the fix on this, at least in the short term, has worked. So a nice little 5% gain yesterday took place on, and like I say, well, it's more than 5%, but for me, I got the 5% out of it with a bit of derivatives, so that's fine, that's fine. Right, so all of that, traditional markets suggesting that this last bounce before the crash is potentially still on the cards, and for those who have positioned themselves in spot, congratulations. For me, I'm trying to basically stay away, because the last bounce before the crash, or just the crash, the thing I was trying to point out yesterday is that whichever direction this goes initially, it's always going to result in a crash. That's how I'm seeing this. So it doesn't really matter if you get the bounce before the crash or just get the crash. And so for me, still sitting out the market for the most part, and just playing derivatives, which is not usually me. I'm usually much more of a spot trader, but as a spot trader, I want to try and withhold a lot of my capital to take advantage of much lower prices if they come. They may not, but if they come. And based on historical data and also the way that economies are going, I expect that there probably will be a crash, but that might be after a 10, 15, 20, maybe even 30% bounce on anything. But again, I expect it to result in a crash anyway, so just holding back on my spot and making the most of derivatives where I can, really just playing it safe. Really, there is volatility, which is all I need for a bit of that. Right, so let's just focus on Bitcoin now, and then we'll leave it there. So Bitcoin is pretty easy. It's the same as it always is. We want to stay above this box. The box starts around about 19,400. It finishes around 19,700. So we want to get above and close above that box. Interestingly, this time the box is even more relevant, because we've got a 21 exponential moving average where we've been rejected from today, and the 20 moving average as well on the daily. So your Bollinger Band Center coming in at the top of that range. So this range is more relevant now than it was in the past. Previously, we can see that is very relevant on a horizontal basis, but now it's got technicals from moving averages in there as well. So it just adds more weight to how important it would be to close above 19,750. And if that were to happen, it wouldn't at all surprise me to first of all see a move up to this 50 exponential, which is today it's about 20,550. Once that's cleared, Bollinger Band top. We're talking getting close to 22,000. This doesn't mean that I think it's going to go there, by the way. These are next resistance after this one that we've been rejected from. So currently, as it stands, you play the chart that you're looking at. This doesn't look like it wants to continue on this daily, unless of course we can get above these zones, 19,750, and then you incrementally scale up. 20,500 to maybe just short of 22,000. Let's just check the shorter term time frames to see if there's any clues as to moves taking place over here. Right, so I mean, as far as this is concerned, the momentum is more or less static, I would say, at this particular level. There's no clue really to be given here. One thing that might potentially happen if we were to continue up is that we might get conversion baseline cross above the cloud. That would be a trend signal form, but we don't have it yet, so we can't even begin to talk about it because it's not here yet. Nothing on the 12-hourly either. So as far as I am concerned, to be fair with you, as far as I'm concerned, it is all about reclaiming this box. Once that box is reclaimed, then we probably will start to see moves up into the 20,000, 21,000 area, top 21,000 area. But right this very moment in time, it's a matter of, I suppose, waiting for that to break and being below the area of significance right now. You have to respect that we could just it might not work out. So again, Bitcoin is like the afterthought of traditional markets, but traditional markets, giving them the benefit of the doubt, look reasonable to me. The reaction is still okay here on Nasdaq, and if we can just break above this 200 EMA, on the weekly, we probably see ourselves move up to around the 12,000 area on Nasdaq, which is basically a 10 exponential. So, like I say, it was worth pointing these things out, like I did yesterday. But you know, as far as I can see, and as far as my expectations are concerned, whether you try and take advantage of this last bounce before the crash, whether we move all the way up to here and then sail all the way down to new lows on the Nasdaq and all assets and stuff like that, fine. You know, there's validation and invalidation even within this bearish formation. You know, if we moved back up and we actually broke outside of this descending triangle, this is a major consolidation pattern. If we were to break out of that, we could entertain the ideas of these moving averages snaking up outside and us coming back down to get support on them, and there you go. We actually start to move up again into next year. But you know, if we could sit and just digest all the information that we get from around the world and all the reasons why we shouldn't really expect a bull market to begin just because we've retested this level, it makes sense to stand back and go, all right, this is still very much in line with the consolidation, and the consolidation is reaching areas of critical support, which if they break, crash territory almost guaranteed. Right, I'll leave it with you there. Hopefully that makes sense. Like I say, keep your eyes on Bitcoin. Breaks above 90,750. Should have moves up into the 20,000s and possibly 21,000s. But for the moment, we've not done that. So we just have to sit back, watch and wait. Thanks for watching. Hope you have a nice day. Take it easy.